Welcome to Grow Money Business, the podcast dedicated to helping business owners optimize income, pay less in tax, and invest prudently. Here's your host, Grant Bledsoe.
Hello, everybody. Grant Bledsoe here. Welcome back to Grow Money Business. This week on the show, my guest is Dionne Perry. Dionne is an expert in credit scores. She has spent a lot of her professional life studying them. She's written a couple books on the subject, one for teens, teaching teens how to navigate the credit scoring system, all about it, how best to use it. The other for adults. She's passionate about the subject and now devotes her professional energy toward helping kids understand how to use credit scores and improving financial literacy. It was really cool to have Dionne on the show. There are some murky areas about how the credit reporting bureaus, agencies actually work that Dionne was able to clear up for us. But also just talking to people who are passionate about educating kids on financial concepts is something that's near and dear to my heart. And I am very appreciative of Dionne for doing in her professional life. It was a really enjoyable conversation. Go out and support Dionne. If you can, go buy her book, go check out her website because she's doing some cool stuff that really positively impacts our young people. I hope you enjoy the conversation too. Hey everyone, I need to interject quickly to remind you all that nothing found in today's episode or any other episode of Grow Money Business should be considered financial, investing, legal, tax, fitness, or even relationship advice. It's content that you're free to use and to deploy on your own terms. And before taking any actions on content found on the show, please do consult with your tax professional, your attorney, or your financial planner. If you don't have a financial planner, head on over to threeoakswealth.com to learn more about what we do in terms of financial planning and investments and how we help clients on an ongoing basis. Welcome, Dionne, to Grow Money Business. Thank you for being here with me today.
Thank you for the opportunity.
So you have built a website called Credit Lit, and credit score is something that is pervasive to every single one of us in this country. And I think very few of us really understand the ins and outs of how it actually works. I am thrilled to have you on today to help uncover some of the intricacies of credit score. Tell us a little bit about Credit Lit. What is it? How'd you get it going?
Okay, again, thank you for the opportunity. My name is Dionne Perry. I am the author of Credit Lit. Credit Lit is actually a series. So, Credit Lit, Credit 101 for Teens, I actually published in 2020. That book was actually drafted and created to ensure that we're having the credit conversation with our kids before they become adults. A lot of times, this topic regarding credit literacy is not taught currently in a lot of the different school districts. And so I wanted to make sure that, this information is covered, that parents would have a guide that they could share with their children or members, children in the family to discuss credit. Because as you stated, we all have a credit score, and it's really nothing that we can do without a credit score. Unless we're just fortunate to be able to pay cash for everything, and sometimes that's not always suggested. So Credit Lit is a pocket-sized book that really touch on the credit scoring process. It really dives into what's good credit, what's bad credit, just to prepare young adults. So when they become adults and they have to apply for credit, they'll know the impacts of good credit versus bad credit. It actually won the Mom Choice Gold Award in 2020. And so I'm very proud of that project. Lit, Lit, is short for literacy. And so a lot of times now, young people are referring to things as lit. So I wanted to try to make it relatable. So that's how I came up with the name Credit Lit. I also have a
I
second.
think they mean literacy, right? When the kids say
Yeah,
lit,
yeah.
isn't that what they're referring to?
Hopefully they do, right? Hopefully they do. And so I also published a second book, Credit Lit series. It's a monthly planner, and this book is actually for adults. A lot of adults don't understand the credit scoring process. And I really, really tried to think about what could I do for adults. I had a lot of adults that purchased a book for their kids and they wanted to learn more. And so I created the Credit Lit 12-month planner, which really breaks down the credit scoring process and also gives little reminders on to check your credit score on a quarterly basis.
That is awesome. Congratulations on the book and the awards and all that. We were talking about this before we hit record, and I just think it's so cool that it sounds like you started this kind of as a side project and have been interested in it and for a long time and wrote the book, and it's just kind of accelerated and gotten some momentum since then. But this is an area that a lot of us financial professionals are really interested in because we see the long-term impact on people as adults when they don't have good money habits that they start with as kids and as juveniles, and people just carry that with them. And I think a lot of times unknowingly we launch into adulthood without an understanding that those credit card balances are being tracked and will impact your financial future. And your initial book aimed at teenagers is it just seems like the perfect time in someone's life to introduce that concept.
Yeah, I
So I'm
totally
just
agree.
thrilled to talk to you today about about all that stuff.
Mm,
So you've been
Yeah, yeah.
interested in it. Go ahead.
Go ahead. No, no. I said I totally agree. I totally agree.
So you've been interested in this for a while. Why don't we cover some credit basics that are you've probably thought about this 100,000 times a week for the last couple decades. What do you consider good debt versus bad debt?
Well, if I can just, if you don't mind, if I could just tell a little backstory about, what made credit literacy such a passion for me, right? And so, when I graduated from high school and attended college, at that time when I was attending college, the credit card companies had opportunities to come out to the campus doing orientation and set up tables and really sell their products. And at the time growing up, my family didn't really understand, my parents really didn't understand the credit scoring process either. And so they were only able to share limited information with me. And so when I was in college full time and I went to orientation my freshman year, it was a lot of different credit card companies there with, offering you credit cards. And, to me, being a young adult, thinking, hey, I can, be responsible, but, I want to establish credit. This is a great opportunity. I applied for those credit cards, right? However, I was a full time student and I was working part time. And I got approved immediately for several different credit cards. And at the time, I made purchases, and my goal the entire time was to ensure that I made the payments on time. However, working part time and going to school full time, unfortunately, in some cases, I was not able to make those payments on time. And I really didn't understand the impacts. In some cases, I made the payments, let's say, within that month, but it was past the due date. And because of that, I receive a lot of late scoring payment history on my credit report. And when it was time, later on, I needed to apply for a automobile loan so I could, get back and forth to school and continue my education. And unfortunately, I was denied. I was denied because I had bad credit. I had made those late payments on those credit cards. Even though some of them I paid within that same month, I just didn't understand the impacts. And so that really kind of like I was really upset. Like I was like, I didn't understand how it worked. I thought as long as I made the payment within the month, even though it was past the due date, I wasn't going to get the late reporting. And that really, really did something to me. Like it really made me interested in the topic. because I felt like this is something that I should have been prepared for in school. This topic should have came up. It never came up when I was attending high school. And so from there, getting the denial of not being able to get the automobile loan, that really shook me, and it shook me to my core. And I pretty much dedicated, learning about the credit scoring process on my own, right? Looking up information, trying to figure out how this process works. And once I understood how it worked and I started repairing my credit, I started talking to family members and members in my community who the same situation occurred to them. They just didn't understand it. They had parents that were not familiar with it. It wasn't being taught in school. No one talked about it. And I began sharing the information that I learned with others. And from there, I pretty much promised myself once I got in a position that I was going to educate others, and not only adults. I was going to educate students, because I didn't want them to be in the same situation as me. And so that's how I arrived at Credit Lit. It just took me a long time to actually get there, write the books, and publish the books due to me working full time. And so, just going back to what you were saying about the scoring process, I mean, each lender has a different scoring process. And, the range of the credit score is a very large range. If pretty much if you have anything lower than a 650, it's very difficult for you to get approved for a loan. And if you're approved at a higher interest rate, and you're paying higher than someone else who may have the same exact loan from the same lender, but because they had a higher credit score, they're paying a lower amount. And so both books actually touch on that, the scoring process and what affects the scores.
Interesting. So there are three predominant credit rating agencies, right? And they all do things slightly differently. Are each of those three using the exact same range of scores and same
What
system?
Yeah, they're not necessarily using the same system, but the range are pretty much standard range. What happens is, and what individuals need to be aware of, if you're applying for a loan and that company is based off of, let's say they're in Georgia, South Carolina. I'm originally from South Carolina. I now reside in Georgia. Most likely that lender is going to pull the credit report from Equifax, right? They may not necessarily pull it from the other two agencies. The only time they pull the credit report in most cases from all three agencies is when you're applying for a mortgage loan. But when you're applying for, let's say, a loan, a personal loan, the bank or the credit union may only specifically pull from Equifax depending on where they're located. So, mainly everyone needs to focus on their FICO score. But when it comes to a mortgage, a lot of times people are not aware that a mortgage company is going to pull all three credit reports. They're going to pull your TransUnion report, your Equifax report, and your Experian report. But when you apply for a personal loan, if you're in South Carolina or Georgia, the company is based out of the state, as I previously stated, they're most likely only going to pull Equifax. So you have to
Interesting.
be familiar. Yeah, you have to be familiar with those rules. And I encourage individuals to look up the Fair Credit Reporting Act. That really breaks down the regulations around fair credit reporting. It's just something that I think that at least should be mentioned when you're speaking to your kids. They're about to become young adults, making them aware so they'll understand their rights, understand how items are being reported on their credit report.
So tell us about FICO Score. What is that acronym? I don't think I've ever known what FICO stands for.
And now you caught me off guard because now I can't think of it, but it's mainly really the FICO score is really describing. They're pulling your credit report. They're looking at your credit history. They're looking at the type of accounts that you currently have. They're looking at if you're up to the limit. Let's say, for example, if you have a $500 credit limit and you're maxed out, all of that is affecting your FICO score. So it's different things. Your payment history affects your FICO score. Also, if you're close to the limit, also what type of credit. You have to have different, like a diverse history of credit. You can't just have a mortgage account. You need to have revolving accounts also, which is documenting how you pay lenders back. So the FICO score consists of several different factors that affect your FICO score and how you're rated.
Are each of the three credit reporting agencies independently tabulating your FICO score, or is the FICO score like a composite of whatever each of the three agencies comes up with?
Each of the three agencies are doing the calculations separately. That's the reason why sometimes you may, and I'm just giving an example, you may have a higher score with Equifax, and then you pull your TransUnion report. The score may be a little lower, but again, all of your creditors may not be reporting to TransUnion, but they all may be reporting to Equifax. And so that falls back to what I said earlier. It just depends on what agencies your lenders are actually reporting your credit history to. And a lot of times, because they're paying a fee to report this information, right? And so a lot of times they're not all necessarily, reporting your information to all three. And so a lot of times you'll pull your TransUnion or you'll pull your Equifax, and you may have 10 accounts on your Equifax, but again, you may have 8 or 9 on TransUnion just because one company is not, reporting to them.
Interesting. Okay. So what are the factors? And the main ones that come to mind are late payments, like you mentioned. If you have a history of late payments, that's going to negatively impact your score.
Mm-hmm.
Your ratio of credit limit to credit utilization is
Yeah.
one. So if you have a credit card with a $20,000 limit and you're maxed out on it, that's going to be
Yeah.
bad. If it's a
Yeah.
$20,000 but you're paying it off every month, that's going to be better. History and all that is also an issue. Well, what are some other
Mm-hmm.
factors that we don't think of quite as frequently but are impactful?
Again, the type of credit. So if you only have just an automobile loan and a mortgage, you don't have any revolving accounts, a credit card on your credit history, that plays a factor also in your FICO score. And then also new credit. So that's a very small factor, which is about 10%. The types of credit is about 10% factor, and then the payment history is 35%. So that's a huge factor. That's the reason why you want to make sure that you make timely payments. I've seen individuals who have, for example, the $20,000 limit, right? And they're making their payments on time, but they're very close to that limit. But then let's say they receive a bonus from work or whatever, or come into some extra money, and that 20,000, let's say they owe $19,000 on it, and then let's say they get a very nice bonus. Let's say they get a bonus for, let's say, $5,000, and they apply that bonus to that $19,000 balance, which brings it down to 14,000. You sometimes will see, in a lot of cases, your credit score jumps because you're no longer close to the limit. And so I think a lot of times individuals don't realize that. And many, many years ago, when I was, actually helping individuals review their credit report and try to make corrections or get items that needed to be corrected that may have been reported incorrectly removed from their credit report, they were not aware of that.
Okay, and we're back.
Okay.
Minor technical difficulties. Well, minor depending on how you want to scale it. Dionne is now on her phone, and we're back. So, what were we talking about, Dionne? FICO scores and how they're compiled. There are
Right.
different factors that go into your FICO score.
Mhm.
Each factor is weighted a little bit differently. Could you
Mhm.
run us through what each of those factors and their weights are again, please?
Yeah, no problem. So, payment history is 35%. current loan and credit card debt. So your ratio of how much you owe if you're at the max, 30%. Length of credit is 15%. Types of credit, because you have to have different types of credit. So that's 10%. And new credit, how much new credit you have, 10%.
Got it. Okay. And you mentioned a little earlier that some lenders might not report your credit history to all the bureaus. And so
Correct.
you might get some different scores from TransUnion than you would from Equifax if you didn't pay back a lender and that lender reported that to TransUnion but not Equifax. Equifax would therefore be higher.
Correct.
If all your lenders are reporting all your information to the three bureaus, are those bureaus calculating everything in the exact same manner? Are they going to
No,
come up with the same score? No?
yeah, no, from my understanding, they're still using a slight different methodology, just maybe just a little different, but the scores will be very close, right? And so that's the reason why, particularly when you're applying for a mortgage loan, they're taking the middle score, because they realize that the scores are going to be a little different. So that's the reason why, particularly with mortgages, they pull all three, but they're taking the middle score to qualify you for a mortgage.
Gotcha. Okay. So if you're someone out there listening who's maybe doesn't have the best credit currently because either you made some bad choices or just didn't know what you were getting yourself into before making one of those choices, what are some of the fastest and easiest ways to improve your score?
Okay, great question. The first thing you need to do is pull your credit reports, right? You need to pull your credit reports and you need to review them. And actually, in the monthly planner, I have a checklist. And the checklist explains the monthly planner for adults. The checklist explains the items that you need to review in your on your credit report, because you need to make sure that the information is accurate, right? And then when you review it, you need to make sure that everything is being reported correctly. You may have paid off a credit card and they failed to report the updated balance, that you no longer have a balance. And so that's the reason why you have the option to dispute items on your credit report. Now, keep in mind, you shouldn't be disputing something that's being reported correctly, right? You're only disputing items, or should be disputing items, that are being reported incorrectly. And so that's the reason why I always encourage adults to pull your credit report at least on a quarterly basis. Some people pull their credit report monthly. They pay for the monthly monitoring services that the credit agencies offer. And so they're able to pull their credit report every 30 days. I mean, that's great, but if you don't need to, that's one less item, one less bill you'll be responsible to pay, the monitoring services. So I encourage to just do it on a quarterly basis, just to make sure that everything is being reported accurately. And then in the planner, it really shows you, like, when you're pulling it on a quarterly basis and you're following the checklist, you're notating, like, what changed. Like, did the balance change? Did you pay down the balance in the last 3 months and the score is now higher? Just so you can understand and really see on paper what's really making a difference in your score. And so that's one of the things I really wanted to include in the planner, because a lot of times you're pulling the score and the score may have gone up, or it may have unfortunately went down, but you need to be notating what changed in those last 3 months to cause the score either to go up or cause the score to come down, unfortunately.
Now, these free credit reports have been the subject of a lot of news over the last, I don't know, decade or probably more. And as I understand it, each of the three reporting agencies is required to provide one free credit report to everybody every single year.
That's
But
correct.
there's also a company out there, freecreditreport.com, that is misleading because that company is not actually free. It's some other service that wants to do this for you that actually costs money. And so to
Correct.
get those free reports, as I recall, you have to go directly to the reporting agencies, and you're entitled to one every year. Is that right?
Yeah, you're entitled to one. I haven't checked recently, but it was a website established a few years ago, which was annualcreditreport.com. And you could go there on an annual basis and pull all three. Now, remember that the free credit report is not giving you the score, right? It's only giving you the information that's being reported. But if you want your score, even with the annualcreditreport.com, that was created for consumers to receive a free copy of their credit report, it doesn't provide the FICO score. And I think in turn, you really need to know what your score is. A lot of times, individuals go to these different websites that allow you to pull it. But again, you have to read the fine print. They may be allowing you to pull it for free, but they may only be getting the information from TransUnion or only getting the information from Experian. And at one time when I was a mortgage broker, I often had customers come in and say, "Oh, my credit score is blah 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 blah," but that's because they were pulling it from the companies like you're referring to. And when you look at the fine print, they were only pulling it from one, right? So they were only pulling it from TransUnion, Experian, whomever. And then when you pull the score, when you're checking for a mortgage, when a lender is pulling the score, they're really pulling it from the source. And so I always encourage individuals to pull it from the source. So you'll have a real clear understanding. So, particularly if you're preparing to make a large purchase, you'll kind of be aware of most likely very close to what your score truly is. And so you have to look at the fine print. You know, and I often said this a lot of times. You see so many uh commercial nowadays around credit, right? But it's around credit repair. No one is really focusing on educating consumers on credit. They're focusing on we can help you repair your credit. But in reality, they can only help you repair things that are being reported incorrectly. And that's something that you can do yourself. And so that's one of the reasons why I came up with Credit Lit, which is short for credit literacy, because my thing is now I am pushing the credit lit movement, which is we need to learn the credit scoring process, and our children deserve to learn the process before they become adults.
Right, right. I completely agree with that. Now, when you say get it from the source, just to clarify, you mean go to Equifax, TransUnion, and Experian directly,
Yes,
as opposed to paying a third party to retrieve those reports on your behalf, right?
that's correct. That's
Okay,
correct.
gotcha. That's what I thought you said. I just wanted to
Mhm,
clarify that. Now,
mhm,
this disputing charges that are or history that are not being reported accurately is kind of this nebulous thing.
mhm,
Personally, when I was in my early 20s, I rented an apartment somewhere. And I had a roommate who wanted to paint the walls or something like that. And so we got approval from the apartment complex. They painted the walls. And they said, well, when you move out, we paint the walls for the new tenant anyway, so you don't have to paint them back. Then we
mhm,
moved out. And like 18 months later, I noticed on my credit report that I had a late charge, like damage charge from that previous apartment
mhm,
that had gone to collections
mhm,
because that I didn't know about.
mhm,
And the landlord was they were they weren't accurate when saying that we didn't have to paint it, that didn't have to paint the walls back.
mhm,
Nobody ever contacted me about the damages, and this thing went to collections. No collections agency ever got to me either, and so it was affecting my credit score negatively. I
mhm,
was unhappy about that and disputed the history at all three reporting agencies,
mhm,
and the disputes were denied.
mhm,
And I didn't really know what to do what to do next, and so and eventually I just paid the thing, but it still showed up on the report and
Mhm.
was on there for, I think it's 7 years before they drop off, right? So
That's
how does this disputes process work, and what other recourse does somebody in that situation have?
Well, you do have a recourse, but you have to be knowledgeable of it, right? And that's the reason why, in the beginning of the interview, I encourage individuals to look up the Fair Credit Reporting Act. And so, when they denied it, you could have asked for proof. What did the collection agency send to them
Hmm.
to show that you were responsible for that particular debt? In order for them to deny it, the collection agency sent something to them. I don't know if they sent them the lease or whatever, but you could have requested, what was sent to you guys where you felt that this request should have been denied. Also, touching on what you said about the apartment and the painting, had you been pulling your credit report at least on a quarterly basis when it first showed up,
Yeah.
right? You would have been able to address it then. And so that's one of the reasons a lot of times individuals pull their credit report only when it's time to purchase something, right? And a lot of times they only pull it when it's time to make a major purchase like a home. A lot of times they don't even pull it when they're making, going to get an automobile loan. And so that's the reason why, um, you know, if consumers take the time up to really look up the Fair Credit Reporting Act and really make this something um, like a normal routine where on a quarterly basis they're pulling their credit report, a lot of things that are being reported incorrectly or that you may not be aware of, you're able to address it then later when you're trying
Mhm.
to potentially make a purchase.
Yeah, absolutely, absolutely. And thinking back on it now, I suspect that what happened is we just got some uh novice person in the leasing office
Yes.
where it was clear language in the lease that we did have to paint it back, but we just got bad information from them and didn't double
Yeah.
check. And anyway, it was resolved. Since then, I did have something else that came up on the credit report that was incorrect that I was successful in disputing, fortunately. But since then, the way that I've handled it personally, and I'm curious to get your thoughts on it, is my wife and I own a house. We have a mortgage. I don't really have a need for credit on an ongoing basis. And so I just freeze it with all three reporting agencies. I don't want anybody taking credit cards out of my name if they get my social security number. And you can call them or go online and require that they freeze your credit and just totally lock it down. And what that means is uh, a a party inquiring about your credit history, which any lender would do prior to extending you more credit,
Mhm.
is unable to get those records. And so if I wanted to go out and get another credit card, I have to let them know and temporarily lift that freeze.
Mhm.
Am I being overly cautious, do you think?
No, I don't think you are due to identity theft, right? I don't think you are. That's not affecting your credit score, so you can freeze it. A lot of times now, instead of freezing your credit report, a lot of individuals again sign up for the monthly monitoring, and which it'll give them a notification if their credit report is full, pull for, and then they'll be like, oh yeah, I did apply for this. Of course, they pulled it. But it's not affecting your score. So that's fine. And if you're, later on want to make a huge purchase, as you stated, you just have to notify the credit bureaus to remove it. But a lot of individuals do that due to identity theft, right? So they want to make sure that someone is just not out there, attempting to use their credit. Oftentimes, if you already have an account and you have, let's say you have a credit card and your limit is $5,000, you've been paying on time, you're not close to the balance, then that particular lender may run your credit report to say, hey, can we give them an extra five and make it a $10,000 limit? But that's considered like a soft inquiry. When you already have an account with that lender, they're pulling it just to make sure you're paying everybody else on time before they offer you additional credit. And so that doesn't affect your score either. So, I think you're fine. You're correct. The negative reporting stays on your credit report for 7 years. A lot of times consumers think that it's 7 years from your the day that you open the account, which is incorrect. It's 7 years from the last reporting, the last activity on the account. And so all of that information is, mentioned in the regulations. And again, that's the reason why we really need to push the credit literacy movement, just so individuals will be aware of, the different rules and regulations.
Our credit scores are used in a lot of different situations.
Mhm.
And do you happen to know whether they can be used in a job application situation? Can an employer pull your credit score when evaluating you for candidacy for a position?
Yes, a lot of them do. You're signing. You have to pay a close attention to the fine print on the application, the paperwork, the pre-screening paperwork. A lot of employers touch. They pull your credit report. They're looking at your credit history to determine your to them trustworthiness, right? And that's one of the things that I have in the book for the teens in particular. Like if you have a team that wants a certain type of position, if they decide to go off to school or whatever, even if they decide not to further their education, certain jobs do require um, they pull credit report. So a lot of financial institutions pull your credit report. If you're in the military, you need a top secret clearance. They're pulling your credit report. So it's a lot of different employers now that are pulling the credit report. And again, that's the reason why we need to have the discussion with our young adults so they're prepared for it.
What about insurance companies? Are insurance companies able to use your credit report when determining a premium on auto insurance or another kind of policy?
Yeah, a lot of them are using that now. So a lot of and that's the reason why I pretty much said, in the book, it affects everything. Like, and I'm just being real. Like, your credit score is more important than the day you were born, the day you graduate from college, the day you got married, if you decide to get married. Like, that score, unless you're just in a financial position where you can pay for cash, don't have to borrow money, it impacts everything. Now they're pulling your credit report for utilities to check to see if you need to pay a deposit, you're getting your first apartment, or whatever, if you need to pay a deposit for your electricity, for water, again, and then automobile insurance premiums, the jobs, they're pulling the credit report, the lenders are pulling the credit report. So you can't do anything without it, right? So you know we just have to continue to have the topic about credit literacy. We have to continue to move that topic forward. And that's one of the reasons why I created the credit lit ambassadors. And so I'm looking for young adults who are willing to have the discussions with their friends, with their peers that are their age, and adults. A lot of times it's embarrassing, right? It's embarrassing. You never really hear anyone talk about, oh, I have bad credit, right? No one talks about it. They don't want to talk about it. They're embarrassed by it. A lot of times individuals unfortunately are depressed by it. They feel like they can't move forward because they're not able to purchase the things that they need to purchase in order to live, or to take care of their families. And I often said that, in most cases, we're all working an honest job, and we're just trying to take care of our families, and this particular topic is really not being discussed. It's being discussed more now than it was before, but it's still a lot of discussion that needs to go on pertaining to credit literacy, just to prepare our young adults.
Yeah, it is. It's unfair to young adults that they're this thing that is the system is tracking their financial behavior without a lot of them knowing it.
Mhm.
And it has substantial downstream ramifications, financial
Mm.
ramifications for the rest of their life. But it's just kind of opaque. Like
Mm.
nobody tells you about it unless you figure it out for yourself. And there are a lot of people out there kind of clamoring for more financial education
Yeah.
in schools in general, which I think is a great idea, and we should definitely promote, credit being one of them for sure.
Yeah, yeah, I totally agree. Some states have recently passed regulations where the school systems are required to touch on this topic prior to students, graduating from high school. So that's a great thing, right? Not all states, but some states have moved forward the conversation. Even with the two books I have, I also have a credit lit curriculum. So I have a curriculum that I created that pretty much allows students, it's a couple of worksheets where they kind of see on paper, okay, I purchased an automobile loan. Me and my best friend went to the same lender, blah, blah, blah. My friend had a better score than I, and it's the same exact vehicle, and one is paying more than the other. And so I'm very proud of that curriculum. And, I really wanted to just really instill in young adults the importance of maintaining good credit, because I know how it feels. I know how it feels to have bad credit, and you're trying to work an honest job. You're trying to take care of yourself, but you just wasn't equipped. You were not prepared for the impacts of it.
Right, right. Well, I really appreciate you coming on the show, Dionne. It's credit-lit.com. Did I get
Correct.
that right? It's
Correct.
credit-lit.com. You have two books, one for teens, one for adults. You can find
Mm-hmm.
them on Amazon and on your website, right?
Mm-hmm. Mm-hmm.
What else? What parting words should we leave our listeners with today?
When you're making big purchases, take the time to really explain to the kids in your family, the young adults, how you're making these purchases. A lot of times they see mom and dad or whomever, purchasing a home, purchasing an automobile loan, and they just see you get the key, right? They don't understand all the paperwork that you have to submit, the proof of employment, the proof of income, that they're pulling your credit report, they're analyzing your credit report. And so I just encourage consumers to start having the conversation with teens that are in the family, start having conversations among themselves. You may have friends or family members that unfortunately have made late payments, and they're privately trying to figure out how to get a good score in the next few years, and just to really start having the discussion. I think that'd be helpful. Again, we're seeing so many commercials about credit repair, but we're really not seeing a lot of commercials about credit literacy.
Well, it's something that I am glad people like you are interested in, Dionne. It's something I am interested as you are, and um, keep on keeping on. It's
Thank,
it's you've done a whole heck of a lot, and I can't wait to see where you take it next.
thank you so much. Thank you.
Thanks for tuning in to Grow Money Business, the podcast dedicated to helping business owners optimize income, pay less in tax, and invest prudently. Be sure to subscribe to the podcast on iTunes, Google, Spotify, or wherever you digest podcasts to ensure you don't miss out on future episodes and announcements, and feel free to submit questions to growmoneybusiness.com.